Welcome to Dad's DeFi Space. I'm Kevin, and I am your guide to everything crypto and DeFi. I'd like to give each of you a big thank you for taking some time out of your day to spend some time on my channel and increase your crypto and DeFi knowledge. Before we begin, please like and subscribe. Share this video with friends who are exploring the crypto and DeFi space. Help us to grow this channel and grow our webpage. Please check us out at dadsdefispace.org and check me out on X CryptoZone 1013. Today, we're going to be taking a look at my full DeFi portfolio. This is something that I try to do on a monthly basis just because I want my channel to be very transparent. Many channels in the crypto space are not going to be transparent with you, but please remember, none of this is financial advice or a recommendation to enter any of these pools or positions. Crypto and DeFi is a risky game. I am not a financial advisor. I cannot make those decisions for you. I'm just a dad who likes to play around in the DeFi space. So remember, crypto and DeFi are risky. You can lose all your money. Please do your own research, and let's get to today's video. Right now, we're taking a look at the Underdog Investment Group DeFi Income Tracker. This is mine for Dad's DeFi Space, and we always need to think about portfolio allocation when we are building a crypto, an altcoin, a DeFi, or a leveraged position portfolio. So, to create a strong base for my portfolio in DeFi, my very first liquidity position is wrapped Bitcoin, wrapped ETH on the Arbitrum network. I've invested around 2,200. My position is leveraged, and it is totaling around $4,000 or $5,000 at this point. My approximate APR has always been around 40%, but I've seen it as high as 80 or 90% and as low as 20%. These are two assets I'm extremely bullish on. Bitcoin is the big daddy of them all. He carries the crypto market, and Bitcoin is my store value and inflation hedge. So of course it's going to be a big part of my DeFi portfolio. Wrapped ETH is the other side of the position. This is where most of the total value locked in the DeFi space is on Ethereum. People fade Ethereum because it has been bleeding against Bitcoin for the past 2 years or so, but I do believe we have an ETH season coming, not financial advice, and I want to be positioned for it. Now, DeFi position number 2 is a BNB chain position I'm managing on Crystal and Revert. It is Injective and BNB. Injective is a layer 1 on the Cosmos ecosystem. Binance Chain is the token of the Binance crypto exchange. I've invested around, at this point, probably close to $800, but the value is around $1,000. Please disregard this because it was revised without my cost basis. So this position has been earning around a 96% APR, and I am not bullish on BNB. I am not. But I'm very bullish on Injective. So what I do with this position is I sell off the BNB into stables. I hold on to the Injective. Sometimes I will deposit the BNB back into the pool, but not the Injective. I'm adding that to my bull run bag. If you take a look at Crystal Finance right here, you can see that within my BNB position, we are sitting around $900, and my APR is around 91%. APR. Now this fluctuates. I've seen it way higher. I've seen it way lower, but it's been an excellent way to earn passive income on my crypto assets. I also have been beating divergent loss. You can see that here compared to HODL, although my position is down around negative 5% just because, well, the market has taken a dump recently. All right, let's move on to position 3. Position 3 in my DeFi portfolio is a Pendle wrapped ETH position on Arbitrum. I invested around $850 and I am earning around an 80% APY. Pendle is a DeFi play, and wrapped ETH, in a sense, is a layer one and also a DeFi play. Bullish on both. All right, position number 4. Position number 4 is my only position on the Polygon network. I've been considering closing this one out. Although it has earned good fees, it is a wrapped ETH Link position. And when I did my research, it looked like wrapped ETH Link had the best fees for a link pool that I could find, hence why I've been in it for so long. That's this pool right here. It's not looking too pretty since my last rebalance, but I am still beating impermanent loss, and I've been earning good fees on this pool. I've been averaging anywhere from a 30 to a 40% APY. You can see right here it's around 27, 28. Within this portfolio, this position should earn me around $300 a year. Our next position number 5 in my DeFi portfolio, is another Arbitrum position, Ethereum wrapped ETH. You can see that within Crystal Finance also. Looking at this position, it has been printing. It has been a smaller one. It's been fluctuating between $300 and $500 because I do claim fees and I do sometimes move money around here and there. This one has been beating impermanent loss by 5%. My APR has been averaging 67%, although earlier in the year it was much higher, around the 200% range. I have earned so many good fees on this one. I try to convert most of them back into Aether, or I keep it as Ethereum and lend it out on Aave. All right, let's look at position 6 in my portfolio, and that is Orca wrapped Bitcoin Solana at around $600. This is a new position. I closed out my old wrapped Bitcoin Solana. This has been one of my favorite core positions within my DeFi portfolio. Right now it's earning almost 10% a month because there's a lot of trading going on. That's excellent. I try my Orca portfolio right now is earning great yield of 12, 13% a month. I'm loving it. Anyway, but you must have a strong core position within each of these portfolios, just because you want a strong base to fight divergent loss. And, well, when the price drops like it has the last couple of weeks. Now we're going to take a look at position number 7. Position number 7 is also on Orca, and it's a Nasanda render pool. Nasana and render are both AI plays or GPU compute plays. DePIN, AI, they both kind of fall within these categories. I'm bullish on both sectors, and the purpose of this pool was to try to catch some price appreciation as the market picks back up. I have around $600 in this pool, and it's earning approximately a 70% APR, give or take. If you go to Dad's DeFi Space, our webpage that I like to publish my articles on, you will find an article highlighting the Nasana render pool. Let's see. There we go. The Nasana render liquidity pool of the week right here. Check it out. It kind of explains the strategy and how I set up the pool. Now, next we have position number 8 is this wrapped ETH Moonwell pool on Aerodrome. I'm actually managing it on VFAT. It's around $750. It's appreciated in price and is earning around 200%. Moonwell is the governance token for Moonwell lending protocol on Base. Their total value lock has been increasing. I am bullish on their ecosystem. This is a midterm play, so I will not be holding on to it for ever, but right now I'm still bullish. Not financial advice. Our next pool on our DeFi portfolio is Cetus Protocol. Now, this is an interesting pool. Send is an asset called Sulin, part of the Sway ecosystem. It is a lending protocol that I'm using, and Sway is a layer one blockchain, the supposed Solana killer. This pool earns an awesome APR over 200%, or it has been for me anyway, and it's been in range for over 6 weeks, which has been awesome. Most of this I'm converting back into Sway, a little bit of Send, and then I sometimes lend it out on the protocol. Now let's move on to position number 10. Position number 10 in my DeFi portfolio is an aerodrome position, wrap, spec, Ethereum. Spec is another virtual agent kind of platform play. I have not played around with it as much as virtuals, but it has been on a downtrend and not as bullish as virtuals. I am still bullish that spec is going to have another run within the bull, and it is something that I'm farming right now on aerodrome. Now, our 11th position is Osmosis. Osmosis is a DEX on the Cosmos ecosystem, and our pair is Injective USDC. It's averaged anywhere from 50 to 200% APR. It's an extremely wide range, but I have not had to balance it in quite a while. This is my pool right here. My range is $18.60 to $34, which is one of my ladder out points of Injective. My APR is 60%. I only have a little bit of liquidity in here right now because I withdrew some of it not too long ago. Now, be aware that the Osmosis DEX does not have as much transactional volume as some of the other DEXs, but I have been able to farm Injective, TIA, Say Network on here and earn some pretty good yields, but I don't allocate a lot of capital to this protocol. All right, next within my DeFi portfolio, we have Orca, AI16Z Solana. This is a AI agent play and platform on the Solana network. It's the only play like this I have on Solana. Griffin is another one that's being talked about a lot that I've been looking at, but I have not allocated any capital to. This pool is earning approximately 180% APR. It is out of range right now, although I will probably rebalance tomorrow because it's been almost 2 days. This pool is kind of trying to earn yield off the momentum of AI and AI agent plays. It has been on a serious downtrend, but I believe that AI agents are going to be a huge narrative as the bull run continues, and I would like to have myself positioned into some of those plays. Next on our DeFi list of liquidity positions and yield farming, this is some risky stuff. It's the Aerodrome platform, Sequoia Wrapped ETH. This was part of my virtual Wrapped ETH pool that I closed about 4 or 5 days ago. This one has taken a dump. I'd put in around $300, $325, so I am down a little bit. The approximate APR of this one has been massive, though, anywhere from 400 to 1200%. I've seen it as high as 2000%. I've earned a lot of arrow off this position, and that allows me to just keep depositing it into Moonwell, therefore increasing my lending position and avoid liquidation. This has been a fun one, but I'm probably not going to stay in this pool too much longer, and I'm debating whether to allocate any capital to the Sequoia protocol. Check out our video on virtual protocol. I highlight some of the AI agent plays on that one. Be sure to check it out. Now, one of our last positions I would like to go over today is on Orca, and this is a meme coin position, Whiff and Popcat. Now, these two positions this position I've been in and out of for quite a while. It's been as much as $600, as low as $100. Right now I'm sitting around $250. It's been earning more yield than the majority of my positions on Orca. So I'm happy with this one, and it's allowed me to add to my WIF and PopCat bags. So, the final parts of my DeFi portfolio would include my lending positions. I have some on Aave. These are on the Base and Arbitrum network. I will show you one of them right here. This is what I've lent on Base. Yes, it's at negative 10%, but most of my farms and altcoins I invest in, I expect to beat this APY by quite a bit. Right now, I'm providing around $5,000 of Ethereum, and I've borrowed $2,500 of USDC. And then that money is deployed in different ways to help kind of turbocharge my portfolio. You have to make sure to keep your total value locked on these larger cap assets like ETH and Wrap Bitcoin. I like to keep it around 50%. If it gets up into the 60s range, I try to lower it by adding more capital or paying off some of the loan. I do pay my loans off when the market picks up and is very bullish. As assets appreciate, I can use some of the profits to pay off the loan, keeping the spread. Now, the next protocol I use is Moonwell. It's right here. I'm going to go to my portfolio. Moonwell protocol is Base and Ethereum. You can lend a lot of good assets. I'm lending my Arrow, as you can see here, around $1,200 worth. I've borrowed close to $900 of USDC, and then I've supplied around $300 of Ethereum, but I'm going to make about a $300 deposit in here to up my total loan value lock, because right now I'm sitting at around 60%, which is very dangerous when I'm providing a volatile asset like Arrow, which can really move when it wants to. Now, the final protocol that I use for lending is Sway Lend. This right here is the Sway Lend protocol. I'm going to connect my wallet and I'll show you some of my lending positions on here, and then what I have on Cetus protocol. I'm going to connect my wallet, and we're going to take a look at my portfolio. Right here, you have my Sway Lend portfolio. You can see that I've borrowed around $900. I'm getting close to my limit and my liquidation threshold, so I'm probably going to be making a large deposit in here after the video. The assets I'm providing are Sway and Sin, straight from my liquidity pool, and then I'm borrowing USDT. The interest rates on this have been really, really good lately. Don't know what it is right now, but it's still a lot less than Aave and some of the other protocols. I don't like to play around bridging capital constantly between chains, so I try to kind of separate my capital between different chains. I have my Sway Lend capital, I have my Moonwell and Aerodrome, I have a VFAT, I have my Arbitrum chain plays, and then I have my Solana plays. I haven't really built much more up on AVAX yet, although I do have a DeFi looping position on AVAX that is being lent out on Aave also. So this concludes today's video. I hope that you can kind of look at portfolio allocations and lending positions. You get ideas, do your own research. If you're interested in knowing exactly when and how I make these plays, please consider joining dadsdefispace.org. If nothing else, pick up our free DeFi course or sign up for our free DeFi newsletter. And if you really would like to up your crypto and DeFi game, consider joining the UIG investment group, Crypto Labs Research. You can tell them Dad's DeFi Space sent you. Find me on there, add me, follow me, and check me out on X, Crypto Zone 1013. I hope you enjoyed the video today, ladies and gentlemen. Peace.